Clock on January 9th, 2023. We're back in action. Markets are rocking and rolling. Let's talk about a little bit of everything today, from the stock market to the macro outlook. Let's talk about the Fed, some yearly pivots. We'll talk currencies, maybe even sprinkle in some cryptos. A lot of options discussion to kick off the year. Looking forward to getting back in the swing of things with the trading room. So let's get started with a risk disclaimer. We understand there's risk in trading. Please and always use trade capital only. Do not trade with money you cannot afford to lose, whether trading stocks, options, futures, forex, cryptos. You know the deal. Follow me on social media. Hasn't changed. YouTube.com/Chris Pulver. Looking forward to being back in action Mondays and Fridays. Maybe sprinkle in some other videos, but it's been pretty consistent on Mondays and Fridays for the weekly outlook, weekly recap. Today we're going to serve today's video up as a 2023 outlook and just talk about the big picture. So just make sure you're following the real me. Any scammers and suspicious activity, get them kicked off social media because they are punks. All right. Anything else? Let's go back to the charts. Hey everybody, how are we doing? I'm gonna log into YouTube, say hi, and I have the euro dollar up right here. We're at 107.30. I actually just closed up the euro dollar for some profit. We're back to a pretty decent level of past support becoming resistance. I know that we've talked about this, kind of 50% level around the 109 handle, which I could certainly see us getting there. But the fact is, my net position was, in some nice profit on the euro dollar, and I'm just going to go ahead and take it, protect it. We're sitting right at the yearly pivot for 2023. If we drift up a little bit higher, that's great. 108, 109, 110. But truth of the matter is, what I'm looking at for the euro dollar would be this. Let's say that we come back up into this 108, 109, 110 handle. We hit this 200 EMA. I could see us dropping back down and filling, this pocket monthly pivot, having a nice little sell-off on the euro dollar, a little bit of a dollar rally with the outlook of the Fed still raising rates through probably May of this year. And if that gets priced back in, we've had a nice recovery, but I would not be surprised if the dollar comes back and retests, maybe the halfway point of this recovery, or even comes back and retests the lows, which would be the high on the DXY. So we'll talk about that all this week in the flex room. But I'm out of the euro dollar right now, cleaning up some positions. I also wanted to say that for the first time in a long time, I just had this happen in my broker platform over the weekend, but I'm looking at some positive rollover. Eureka. So yeah, I'm looking at the financing balance. Positive, 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 positive. I have 1, 2, 3, 4, 5 line items of positive rollover. I didn't think it would ever happen, but it did. So guess what? My Aussie Swiss is now positive rollover. That's one of the positions I'm still in. CAD Swiss still positive rollover. Euro Swiss positive rollover. Pound Swiss positive rollover. New Zealand dollar positive rollover. Dollar Swiss positive rollover. And dollar Sing got filled on a position positive rollover. Guess what that means? If liquidity providers are doing it, I should be seeing positive rollover, positive carry in my trades in Forex. So it may not be a game changer, but if I'm seeing positive rollover, that at least is incentivizing me to hold positions and build small over time over the next, couple of months, most likely. So anyway, let me go and see who's live today. Hopefully everyone's tuning right back in. Let's see here. There we go. Everyone's tuning in. That's good. That's good. All right. Let's see here. Debbie in the house. Welch. Is that Mark? Mark Welch? Welch and Son. How's it going? David, good morning. Craig, good morning. Don, good morning. Chris, good morning. Jason, happy new year. Exactly. You're back. That's good. What's happening? Rich, good morning. Gary, good morning. Mike, good morning. Sue, good morning. Mosh, good morning. Darigis, nice to see some familiar names. Nice to be back with everybody. All right, so we'll talk about currencies in a little bit here. Let's get to the bigger picture. We had some news last week on the calendar. Non-farm payroll was Friday. We'll take a look at this week's calendar as well. So let's go to last week. So this week's news. Go to last week's news from the 1st to the 7th. We had our, holidays obviously for the last couple of weeks. I appreciate everyone giving me the flexibility to stay, get a little bit of a 2-week break, if you will. I did work like 1 week, but it was pretty passive. So all in all, pretty good. And I hope everyone else enjoyed the break and had great holidays. So we had non-farm payroll on Friday plus CAD news. CAD news came in better than expected with a nice print on the job front, better than expected unemployment rate, average hourly earnings. This is what the market was celebrating last week. Average hourly earnings were a miss, but the jobs were fine. Unemployment was down. So, I'm not really sure what the Fed is thinking as far as what does this data do for a tighter job market or still remaining a tight job market. We'll find out. The PMI, the ISM numbers down below 50 is probably not a good thing. However, listen to an interesting podcast this weekend, comparing the ISM numbers or the manufacturing numbers to the service numbers. As long as service numbers stay relatively high, you know, again, the ISM number below 50 has kind of also been a bit of an additional factor to a recession flag. We also have our crazy deep inverted yield curve from the 2-year and the 10-year, but the ISM number below 50 is kind of a concern. Can the Fed navigate something like a soft landing? We're still going to have a recession this year. That's the big discussion. Is inflation going to surprise to the upside or the downside? We're not quite sure, so we're going to figure it out. Okay, but that was last week. So the markets were up. Take a look at today. I mean, Wall Street's opening in about 20 minutes. Take a look at pre-market on the SPY. 388.08 was the rally from last week. We closed back above this little tight range. Here's the daily time frame on the SPY. So this was basically a 2 to 3 week breakout. We had our gaps lower from that, CPI data back in, that would have been December. So we had our CPI high at 410. We're back into this nice little island gap. We hit the monthly pivot for January. The yearly pivot, in fact, I'm trying to think. The yearly pivot's still available around 403. So we might come back up here. And part of this would probably be due to China. I mean, I think China's ripping to the upside right now. The Hang Seng's well above the 200 average, and we're seeing some growth opportunities there. We're seeing some energy prices up, material prices up, commodities showing some signs of rally. But if we have a bear flag, look, if it's high-low and it's a bear flag, then we're right at resistance, and we end up either staying in consolidation or we break back lower. I could see a little bit of a test with this yearly pivot and this high. We could see a bull trap going on, where we come back up here towards, let's say, 405 to 410, and from there the market just gets it faded back down. We just have a lot of volatility. I think that this area is heavy resistance. I would be very surprised if the SPY can break above 410 and stay above 410. So with this little recovery, I could see a lower high to lower low. I could still see us coming after this low. Part of it's going into earnings season for Q1. How bad is it? If we still have a monster amount of tech layoffs, if other companies start doing the same thing, we'll see. If we're starting to lay off, millions of people, then recession is likely in the cards. If we're not, we still have, decent prints. Like I think we've created like 2.5 million jobs over the last 6 months. So we still have a pretty solid labor outlook. Housing's obviously compressing with mortgage rates still well above 6%. Here's daily, daily mortgage. Is that what it is? Daily mortgage news or mortgage news. There it is. Mortgage news daily. I knew it was something. So the average 30 years at 6.2%, which is off the highs we had last year around like 7.1. See if this has a rate chart. So yeah, we got up to like 7.25 on the 30-year, and it's dipped pretty heavily. Inflation numbers, if you look at the CPI chart coming down, here's an inflation chart. So year-over-year inflation, right? We peaked here around 9%. We're down to 7.1, and still room to go. Obviously, a long ways to the downside, but it's going to be tough. We're going to have to see, a lot of satisfying numbers out of the Fed, and probably what's going to seem not so great for the economy. But what's not great for the economy is probably great for the Fed. And what's great for the economy is probably not great for the Fed. So one could say we're in a bit of a catch-22 right now, but we're going to see how that plays out. 2022 was a grind of a year. We kind of had the surprises in 2020, the drifts and momentum in 2021, and then kind of the great reset and great reality in 2022. So what do they end up calling 2023? I think it's the year of real companies that make money, that have limited debt, that look good on a balance sheet, that have good fundamentals. If you're trading stocks and options, I say pick the strongest companies you can possibly pick. Don't jump on the tech bandwagon. Don't think that because tech is down 80% that it's a good opportunity. Look, if borrowing rates are high, cash, these burn rates of these tech companies are obnoxious. So I would rather go into, more defensive plays. We talked a lot in Equities on Demand, the trading room, about trading financials, trading materials, trading, kind of blue chip dividend stocks as well. And, we also have some fixed income vehicles that bond rates at 3%, 4%, not bad. If inflation's coming down, at least there's preservation of capital. So it wouldn't be a surprise if massive insurance gets a lot of inflow this year. We're seeing a lot of outflows from just your standard SPY, your standard ETFs. You're seeing a lot of inflows into alternative investments, a lot of hedge fund activity out there, which is good. So anyway, interesting stuff. What's happening here? We have Ruth Ann. What's up, Ruth Ann? Hey, thanks for giving a shout out to old Benji boy. He's sitting right here on my lap. Lloyd, nice to see you. Good morning. Catherine, good morning. Lawrence, how you doing? Najib, thanks. All right, so there's our inflation print. Equities on demand this week. We have class here in 45 minutes. We're going to discuss really this week's expirations are pretty light. I have a couple of covered calls out this week, but 120 is a big one. I have about $100,000 worth of covered calls that are expiring on the 20th. I only have a couple of stocks getting called away. This next couple of weeks, I might have Netflix getting called away. We're trading at 3. Oh, wow. I might even, I try to roll this again, possibly. So I've rolled Netflix twice already. I put in a 305 covered call twice, and I've lowered my cost basis by $10. So I've got a break even on Netflix at 280. I have an expiration this Friday at 305, which give me $25 a share. If I could roll it maybe one more time, since we're trading at 315 to 317, I might keep it at 305 once again, go out to the 20th of the monthly expiration, possibly grab another. I mean, heck, if I can grab another $4 to $5, that is worth it to wait another week and see it. Let's make sure there's no earnings coming out. Earnings on Netflix. Hopefully it's the 25th or after. Should be. And it's probably after, but let's find out. 19th. Ooh, snap. So that'd be a little flirtatious with the expiration. If it's aftermarket on the 19th, and I went out to Friday the 20th end of day, that would be next Friday. So I'll talk about that in class at the top of the hour. So we'll get into equities on demand. But the premiums are pretty solid for Netflix. We had a nice recovery on Meta as well. And overall, I mean, I've added some positions on Tesla. We're trading at 113 pre-market, looking at a little bit of recovery. So I have some calls going on Tesla, some bull put spreads, lowering the cost basis a little bit. I cashed in on a long put as well from 150 down to 105. So that was about a $45 long put that helped me lower my cost basis overall. I'm still just longer term, but we have a yearly pivot on Tesla around 211, and I'm showing a break even at 206 with some credit spreads down here to lower the cost basis a little bit further. COB, is that what that is? COB? Is that corn on the? Just kidding. Cobalt Blue. Okay, Cobalt Blue Holdings. What do they do here? Exploration, development, marketing, cobalt properties. Is that it? Is cobalt the thing? So I'm guessing a lot of this is raw materials, acquisition, procuring for lithium batteries. It's an EV play essentially. Let me look at the technicals first. I can get into. I've got a little snowflake analysis. It's a quick pop up. Yeah, let me take a look here. So COB. Oops. Is this a US based? So I see this in Aussie stock. Yeah? Cobalt Blue Holdings. All right, anyways, take a look. So very limited revenue, currently unprofitable, not forecast to become profitable over the next 3 years. So either they are dumping all the money they make into their projects, has less year. So again, I'll just say at a glance, these are my concerns. Less than 1 year of cash runway. They need some angel investors. They need some cash. They don't make a lot of revenue. I mean, it's not checking a lot of boxes here from what I typically look at. Insider selling the last 3 months. The stock's obviously been up quite a bit off the lows around 53 cents and trading. Yeah, I mean, you're playing with, I don't know if this is like in the OTC market. I don't know, man. Be careful, right? I mean, 63 cents, like, sure, we could get up here towards $1, and that's an awesome run. There's levels back here, and this is 2018. But, I just see that this trend hasn't broken. This could be our channel to the downside. We're kind of stuck in the middle. So perhaps it just kind of continues to range. If it came down to bargain levels like 25 cents or lower, maybe getting some in there with just, it's a small position. Treat it like a kind of a venture capital position. It's risk capital, but off the lows, maybe it has a, incredible upside. But just be careful. I don't check a lot of boxes up front, right? I mean, like I said, I think 2023 is going to be the year. And again, there's obviously chances for surprises and all this other crazy stuff that can happen. But I think after 2020 surprise, 2021's momentum and bubble, and euphoria, 2022's reset, everything felt kind of off and weird, right? We had like crazy energy prices that then came back to reality when oil was up to 130, came all the way back down to 70. We had, China pretty much on full lockdown. We had the U.S. back and forth dominated by the Fed. It just was it was a crazy year. As traders, it was a crazy year. So anyway, some exposure here isn't bad, right? I mean, would I take it at 63 cents? Possibly. I'd prefer to trade options around it, to be honest. Less risk, but I don't know if we can get. I doubt this is optionable. Um, so it possibly just the old dollar cost averaging, maybe a little position in here, maybe a little position, back in this area around 25 cents or lower. So maybe position one, position two, set a chart alarm at this high and this high. So that would be profit one, and over here would be profit two. And upside looks pretty solid. Like you've got risk here and risk here, but that's essentially your max downside. So if I was comfortable taking a trade and risking, let's say $100, my upside is probably 3 to 4 times that, so whatever you're comfortable with. But that's the way I see it. And then fundamentally, it's not checking a lot of boxes, but it is in the area of, electric vehicles. Cobalt's a big thing. There's all sorts of uncertainty between the demand for cobalt, lithium, copper, silver, even. I mean, all these kind of materials and metals that will be big. I read an interesting, I think it was just a tweet that EV vehicles could potentially be. I don't, and again, I'll have to kind of fact check it, but potentially more pollution from electric vehicles as far as like battery plants, manufacturing, procuring, than there would be kind of the savings in emissions by creating a whole batch of electric vehicles. But again, I'm not positive or negative. I just think that if you're going to have electric vehicles, then have a grid where you can charge your car, you know, um, or stay home, stay home and stay in your range. So anyway, BHP is another one. Okay, so COB, BHP Limited. Now this one's different. BHP I have heard a lot more of. This is a good range opportunity, I think. I think this looks pretty good from highs up here, lows up here, or lows down here. I wouldn't really get too interested at this level around 66 unless we have a wide open breakout. Wide open breakout looks obviously promising, but coming back up in the 70s, I can see a range trade. I am very much expecting a lot of range trading for the first maybe quarter, maybe the first half of the year, as the markets kind of gain some traction somewhere. So, to me, this looks like I would be looking to sell 72, but I'd be really interested in buying $50 or lower. And that's a solid one. BHP. Also, another one is Rio Tinto. That's a big one as far as the energy play and looking at. Let me type it in here. Rio Tinto. There's a big range on this one. It's the channel that I see. So RIO. We have this, right? So we have this big upward channel that's showing a corrective downward channel right now. So Rio Tinto, like so. So if we were able to scoop up some Rio back down here into the mid to low 40s, I really like this play. That BHP I'd be pretty interested in as well. So let me do some exploring on those. So we have COB, BHP, RIO. And we'll take a look at those. I'm going to kind of pair those together and talk about them in EOD this week. Okay. SBLK, Don. So Silk Shipper, great growth and dividends. All right. SLK. Yeah, I mean, that's Silk Road. Oh, SBLK. Sorry. Yeah, Silk Road. I'm like, no thanks. SBLK. Trading at $20. Looks like we have a potential head and shoulders pattern in here. Potential head and shoulders for a bit of a reset. But again, if we have some stability, maybe this is a rally off the lows. We can have rally here. We can base here. There's our high. So if we can base around, let's say, $19, maybe make a run back up into the, there's some resistance here around $25 to $26. If we clear that, then we've got open space towards the mid 30s. So again, maybe a range trade, right? If these lows hold, then we could possibly have a range trade back up into 30s. If these lows break, I'd say just be careful on that, having stop losses in versus just heavy amounts of dollar cost averaging. Another important theme for this year is keep cash and margin at the ready. Reason I closed out a euro dollar, a little bit earlier than I wanted. I was willing to take it up to like 108.50 to 109, but bailing on the euro dollar position right now. Number one, that removes the final negative carry position in my forex portfolio. That also gives me a chance to position for the dollar, which I think will have some strength. We take a look at the Fed watch tool for a second. We're sitting at 4.25% to 4.5% on the official cash rate for the Fed. And we are looking at a February 1st, which is, again, silly how the Fed is doing this. We're going to look at the calendar here in just a moment because I think we have CPI data coming out this week. But February 1st is the Fed rate decision. It's another 25 basis points expected. You go into March, you see that there's another 25 basis points baked in. So rate decision in February, up. Rate decision in March, up. Rate decision in May, still staying at 4.75, but possibly May to June, we might see a bump up right here. Starting to see that split, 4.75 to 5%. If this ends up bumping up, the market's kind of anticipating, as far as the CME group goes, the market's anticipating a 4.75 to 5%. That's essentially the peak right now. Now, can that change and go higher? We've seen the Fed shift the target all of 2022 several times, and the market hated it, and so did we. It was so annoying. But right now, the market's kind of peaking out the Fed around 5% and not necessarily pricing in rate cuts by the end of the year. Right? Look at where we are. The highest probability is that we stay around this 4.5%. So even if we raise in here to 4.75 to 5, the likelihood of the Fed going into cut mode is pretty slim. I think that they raise to a restrictive level and they maintain that until inflation continues to come down, until jobs continue to come down, until demand continues to come down, and we fight the good fight, right? The Fed does not want to see 4, 5, 6% inflation. The Fed wants to see it back down to 2 to 3%, and we can get there. We can essentially rock with 0% CPI, but it will still be hanging around 3 or 4%. But still, the rates are going to raise. I mean, we're going to see rate hikes the next couple of months. So just be prepared for it. Okay, so that's something to watch. Like I said, I wanted today's video to kind of be a big 2023 outlook. Let's take a look at the overall markets. Okay, let me go to the SPX. So we talked about this a lot last year. Okay, look, we're still in a tightening cycle. Okay, where's this on? Just look at the technicals. All right, let's forget about the speculation right now. Where are the technicals? On a daily time frame for the SPX, we are still below the 200 EMA. Guess what that means? We're still in the sell zone. Okay. I don't care if this market pops back up here, this yearly pivot, and finds this high from December of last year. The bears are still in control if they want to take it, right? And with a tightening cycle, if the market's not happy with it, if inflation prints, and this is a big one, we'll find out. When is CPI data coming out? Is it this week? If we have red hot inflation data this week, which again we may or may not, this week, yep, let's go this week. I think we have inflation data this week, right? Powell speaking Tuesday the 10th. What's he talking about? How cool he is. Central bank independencies in the mandate, evolving views. Okay, so Powell speak. There it is. So there's Aussie CPI Tuesday night. Aha, there it is. So Thursday CPI for the U.S. Interesting. All right, 7.1 is the previous print, which is a big improvement. Okay, 6.5 is the current forecast, which is 0.6% better than previous. So you can see that the market is looking for a strong improvement in inflation to the downside and continuing to push this lower. Now, we know that inflation data for the last 8 to 12 months has been a massive mover. So Thursday's Flex Trading Room, guess what we're going to trade? Dollar crosses focused on CPI news. It's going to be the excuse for the dollar to move. Another reason I'd like to be neutrally positioned on dollar pairs. I'm long dollar Swiss, okay? I'm long New Zealand dollar. I'm getting out of the euro dollar right now, but I think that the dollar could be positioned for some strength coming up. We're seeing some oversold conditions on higher time frames. If CPI data comes in, let's say stickier, right? Let's say it prints at like 6.6, 6.7. That's an easy pivot for the market to drop and the dollar to rally. If the print comes in 6.5 or better, then we might see that the market continues to recover. The dollar gets weaker still. And we just have, what goes up on the dollar just continues to kind of work its way down. But the market's at least seeing improvements on inflation. That is probably, one of the bigger focuses on the Fed this year. Okay. All right. So that's Thursday this week. We'll trade it in flex. We'll start the session. We'll get ready to rock and roll in the news. Let the news come out for the first couple minutes, and then try to establish some flow for the morning, and see what the CPI gives us. Volatility on the dollar crosses. That's going to be the main focus for Thursday's trading. We have pound GDP. We have U of M sentiment report. Let's see what the trend has been on this for the last little bit. A lot of mix. Yeah, mostly red. 2022 was like terrible sentiment, right? Terrible sentiment for the most part. Last time we printed a little bit better than expected. It's forecasted to be back above 60. I don't know if that means anything or not, but we'll find out. Okay, so makes sense on the SPY, right? The S&P 500, it's like, look, we're daily chart still below 200 EMA. The difference here, look at this. This is the Hang Seng. I think it's HSI. Yeah. Look at the difference. Where's this index relative to the 200 EMA, which is my red line? Can everyone see here that China's reopening, the loosening of zero COVID restrictions? We've seen this surge to the upside. We are above this 200 EMA. So we have, gone from the depths of hell essentially into a really strong recovery. And I could see, a dip. I'm interested in buying the dip. So, I mean, a decent play in Asia right now, decent play in China. Again, listen to an interesting podcast on the thoughts on this. Does this mean commodity boom, energy boom? Maybe, but this also might mean more of a services tourism spending spree just coming out of COVID. I mean, think about what the U.S. did when we came out of COVID. We booked vacations. We're ready to travel. We're ready to go back to work. We're ready to spend money. We're blah, blah, whatever, right? To the point where it's like probably an unhealthy amount where people are spending more than they can trying to maintain a lifestyle that is maybe a little bit more on credit than it should be. But we're also a 70% consumer nation, right? We're not a manufacturing nation, we're a consumer nation. So anyway, we're above the 200 EMA. I like buying on dips. So pullbacks here, I think we look good to the upside. Possible continuation more with stimulus coming out of China and zero COVID. Yeah, looks good to the upside. I'd rather be long, the Hang Seng right now versus long on the SPX. I think the SPX still has even room to recover. It runs into a lot of resistance as we're below this sell zone, right? So unless if we clear these highs at 410 or 4100, then possibly some continuation higher, right? We break this channel. But if we come up here and hit the yearly pivot, hit this 410 level, I could see that being a bull trap, and we come right back down. And again, we'll just see if the market really, hates the idea that it's impossible for tech to recover. Tech jobs are getting laid off like crazy. Maybe it starts to, transfer into other sectors and whatnot. I don't know. We'll find out. But I'm just not convinced that the bulls are totally in control. I think this is a great little recovery. I think this is a great spot to be getting rid of some stocks, like I'm trying to. I'm trying to get rid of a handful of stocks with some covered calls, and I think that's pretty wise to just keep the cash at the ready. So anyway, big stuff, right? SPX, SHY, sorry, Hang Seng. Volatility index sitting at these lows. Really some easy credit spreads on the VIX. If you're able to play the VIX down here near these lows, just some really simple bull put spreads right there. 21 by 20 all day. 21 by 20 all day. Even if it's this, every time it comes back down to 20 bucks, you just do a long call or a bull put spread on the VIX. That could be money that happens all year. At some point, we'll have a spike up. At some point, we'll have higher volatility. But if you're able to just do simple, credit spreads on the VIX, I think that's a pretty simple play at 20 all year. Until there's maybe some surprises, and truthfully, surprises will be more of the upside probably on the VIX. Okay, all right, let's talk some currencies. I'll take a look at oil, gold, silver, crypto for a moment. Oil's at 75. There's nothing about oil right now that screams bullish. Not yet. We've seen lower highs, lower highs, lower highs, lower highs. I see a lot of coiling going on, right? I mean, we might come back down here and tap the lows. This might discourage a lot of bulls if we come back into this sub 70 level on oil, but there could be some big buyers right back up to that yearly pivot around $95. So I do think that there's a good opportunity to play oil. If we come into some really solid demand levels and some really strong support, then sure, oil looks great. From, let's say, sub 70 back into like $95 to $100, I would be long oil for that play. And again, it's pretty near term. It's just a nice technical setup. There's really strong support back here in August of 21 up to December of 21, which of course 2022 is year of oil's going to $250, or it's not, and it didn't. But come back in and kind of compress into this long support zone, and I would take oil long again. And that could be driven by, like I said, China could be a part of that with reopening. But if we compress a little bit lower, I like this sub 70 area on oil. Okay, gold and silver, you're gonna have to watch the dollar. Okay, gold is up to 1875. Guess what? Gold is up, dollar's down. It's pretty simple. So gold is really trading as an inverse correlation to the US dollar. So if the dollar continues to get softer, gold continues to get better, and silver, same thing. And we're long on both. I mean, we're long with credit spreads on gold. We're long with credit spreads and stocks and call options and credits and covered calls on silver. My covered call on silver is 24. SLV is trading right now at 22.02. So I'm still cover this bad boy up to 24 bucks, and this is a big position. If I get this called away, my break evens are around $18. I would gladly take $6 a share, and possibly more. I mean, if I can sneak up to $25.50 or $26, that'd be ideal. But anyway, silver's looking good, gold's looking good. Here's the DXY. DXY, a little fake to the upside, coming back down, but this is the area that I said would be important support, right? Past resistance right here at 103, we finally hit it. So guess what that means? Are we oversold? This is the daily time frame. I see some really strong divergence, right? Prices going lower, obvious disagreement, but do we have oversold conditions? Not yet. So it might still be able to set the dollar on a slightly lower path, but if we start to get some revisits here, maybe some oversold conditions, I'm going to look to kind of cost average into a recovery on the dollar towards this halfway point. You know, the dollar could do a couple of things. One is we find some support, we rally hard back up into this halfway area. You know, there's a big breakout pocket right here. There's a nice monthly pivot. This is target one if I'm long on the dollar. Target two would be that the economy is not looking as good as it is. The stock market sells off aggressively and retests those lows from October of last year, and that would put the dollar likely back up to the highs. Now, from there, I don't necessarily think that technically the dollar is going to break higher. I think if we revisit the highs on the Dixie, we're going back down. And this could be 2023 could be a lot of range trading. High to low, and that's what you trade, right? Opportunity to buy low, opportunity to sell high. Make sense? So I'm looking right now in the near term to look for some dollar positioning. And again, I want to see some technicals. I'd like to see some Masterflex dashboard alignments to get some buy zones. But you know, divergence here. If we retest the lows, get some oversold conditions, I'm looking to see if we go long. Okay, so that's dollar index. Gold and silver, again, watching the inverse of that. If the dollar gets softer, gold and silver look good to the upside. We'll go to crypto for a moment. I'm just going to check Bitcoin. It's been trading this $16,000 area for a while. Volatility is super light. We're trading at 17.2 right now in Bitcoin. You know, there's still a lot of bulls have to prove a ton, right? We need to get out of this FTX drama. I don't know if, you know, a lot of real money is going to start dumping into cryptos. Bulls would have to take out this high at 21 for me to get even remotely interested in a bottom. You know, I'm not calling the bottom now at 17.2. I would say that if we take out this low, or I'm sorry, if we take out this high at 21, you know, is this a potential crown pattern or head and shoulders, right? Is this our reversal pattern? Maybe. But we're still well below the 200 EMA. This challenging high at 21,000. I'd have to see a very obvious pattern. You know, even this wedge too. We break out of this wedge, give us a crown pattern on the backside here. We have a yearly pivot for 2023 back at 26 or 27. Look, this is a valid target. I do think that Bitcoin can technically make its way back up to 26, 27,000. The question is where do you want to trade it? Do you want to just dollar cost averaging now at 17? Does it go back down to 15? Go back down to 10? Go any lower? Does it just continue to disappoint, or does it go nowhere? If this goes nowhere, then maybe the best breakout is look for obvious bullish momentum and see if this area we can start looking to play, right? Confirmation, I think, is key on Bitcoin. Otherwise, stay patient, set some chart alarms. Okay, all right, let's get in some currencies here. So let's find some directions. Aussie CAD. I still like long Aussie CAD. I'm still long Aussie CAD. And let's see. Actually, I take that back. I closed out Aussie CAD around this 9,300 level. So I closed out already. Yeah, I'm not long in this one. Aussie Swiss is what I'm long on. And we're trading at 63.70. So this one potentially I like long. I've said this for the last couple of months. If we break above 64.50, then we could be holding this low. If we get a pop up here to 64.50, maybe a pullback into 63, I'm looking for a move back up. We have some nice pockets in here, nice pockets in here. We have a yearly pivot sitting up around 6,500. So if there's a chance to kind of get in around 63 or back down around 62, I like that potential kind of deep buy or deep pullback zone on Aussie Swiss to go after a positive rollover trade, also a yearly pivot around 65. So it may not be a big pip opportunity, but maybe 200 to 300 pips that are pretty steady, and maybe adding some positions in on that one. So I still like Aussie Swiss long, plus I like the rollover. Aussie yen, a lot of the yen crosses. I weathered the storm. I got in a ton of trouble on the yen crosses last year. I worked my way out of them. Dollar yen's done for profit. Swiss yen's done for profit. Um, I'm I'm kind of back in the old mindset, which is why the heck did I trade the yen? And this year it's like if I don't have to trade the yen, I really don't want to. I will say this though, maybe short-term trading only. Try not to position for the yen. Try not to do leveling in on the yen. Just simply trading volatility. Yen has had plenty of it, good and bad. So I'd rather be neutral on the yen this year and looking at day-to-day volatility, take advantage of news opportunities and some big volatility days, as opposed to trying to position myself for who knows. I mean, literally, I rode the dollar yen from 120 up to 150 and scaled out, getting my butt kicked on the way up, and then scaled back in and got pretty heavy on the way back down from that correction from essentially 150 down to 130. So it worked out in the end, but man, it was not fun. It was super stressful, and I kind of hated the whole position. So I'm good, just kind of staying way more short term and neutral on the yen crosses, and just let the JPY do whatever they want. The BOJ is going to do radical stuff. Let them do radical stuff. I'd rather take advantage of the volatility and not look at having a position and try to be right with the BOJ doing all sorts of crazy stuff. Okay, Aussie New Zealand. We had a great trade in this one to kick off the year. We're just shy of this yearly pivot, but we did come back into the pockets that I was after. Okay, both of these levels right here, we were long on the left-hand side of the trend line, getting in early at 106, getting long at 105, adding to the position on the right-hand side, took some profit in this 108 level. So 108, 108.50, take some profit on that Aussie New Zealand. It's a safe spot to be protecting right now. Here's what I would look for. If we had this yearly pivot hitting and it comes back down, maybe a retest of the lows or lower, I would love to position a big bull pattern on the Aussie New Zealand to go back to these highs. Okay, there's a big range, 1.14, okay, 1.14 resistance, and then 1.00 support. So anything, 104, 103, 102, 101, 1.00, I'm buying low, and even if you take it halfway. If I bought it low and take it to 107, just look at my numbers. 114 to 1.00, midpoint's 107. If I bought it low enough, take it back to the midpoint every single time. It's just a support and demand or support resistance, supply and demand trade on Aussie New Zealand. I like that trade. But if we get another setup, we'll take it. Otherwise, we took a big chunk of profit there in Aussie New Zealand. I cleared, I think I built up 3 or 4 positions in this one, cleared about 1,000 pips. So pretty happy with that overall. Okay, good stuff. Yeah, thanks, Everett. Nice to see you. Aussie dollar. Aussie dollar, I said 7,000. I said 7,000 is the number. We're at 69.25. Again, am I going to hold it all the way to 7,000? No. It's good enough, man. We recovered out the lows. We're on the right-hand side of the trend line. We've been drifting higher. The dollar's getting softer. Look at this resistance. 7,000 is a round number. If we hit it, great. But we're at 69.25. If you've been long at all from the lows at 62, you're up 700 pips. Protect your profits, right? Move a stop loss to 6,900. Move a stop loss to 6,850. Protect your profits. If it hits 7,000, great. If it doesn't, take your profit with a protective stop. But it's doing what we want. Okay, what reason I say that is we could hit 7,000 and we go right back down. So watch out for that, and I'd rather be protecting my buy trades and looking to position fresh for some sell-offs if this resistance continues, which technically it looks like it could and should. CAD Swiss 68, 62. I still like long CAD Swiss. Now that might sound crazy. We're on the right-hand side of the trend line. We have a yearly pivot. We have a pocket. We have some oversold conditions over here. If we come a little bit lower, I'm just going to level in some more. Looking for a reversal pattern, looking for bullishness. Also, CAD Swiss, 2 things, positive carry and an oil recovery. If oil hits that $70 to $65 level and then shoots up to $90 to $95, that should drag the CAD with it. This would be a great opportunity to take full advantage of that. So patience right now in the CAD Swiss, but I like building small and staying consistent, and then looking for this to come back up into the yearly pivot and this pocket combo that I have marked, 71.50 to 72.50. So this is a pretty big one that I'm looking for this year. CAD Swiss, it's a nice position trade. CAD Yen, like I said, leave the yen pairs alone. Swiss Yen closed out for profit, and man, I'm friggin' glad that I did, because look at this. Look at that, right there. Monthly past resistance became support to the pip, and then this thing jumped up about 400 pips. So I am super happy that at 140, taking some profit, we had a level around 139 was the low. And, it didn't hit my measured move, but it did hit that monthly wick high. And that was previous historical highs. It was broken last year. So I'm out of the Swiss yen. This was a final recovery that was, nice to cash in on. I had two opportunities to close. I was profitable here, and then as soon as we broke the lows, I was trailing and got knocked out around 140. So glad that trade is over, and pretty neutral right now in Swiss yen. Euro Aussie, kind of interested. I take. I'm not to do anything. This one's nothing. Euro CAD, we were looking to sell up here. I'm still interested in selling this actually. Not right now, but if we come back up to the same highs again, we come back up to say 4,600 or possibly drifting up to this pivot from 2022 around 1.47. I really like selling this area here on the Euro CAD and then taking it back down. Now, again, keep in mind that Euro CAD is an inverse to the CAD Swiss. So I might do 0 trades on the Euro CAD and just focus my efforts on the CAD Swiss. Euro CAD is going to offer more pips, more opportunity, more volatility, but I think the steadiness of the CAD Swiss with a better differential and rollover could be a better position. CAD Swiss might be, positive rollover plus a 300 to 400 pip move. Euro CAD might be a little bit more volatile, offer 500 to 600 pips, but the Eurozone's up to 2% right now, likely still going to raise rates. The CAD's sitting at 4%, so it's still a rollover trade, but I like the CAD Swiss differential a little bit more. And I'm also still looking for the Euro Swiss to get weaker, as in like the Swiss to get weaker and this Euro Swiss to finally come back up into this area here on 105. If we can break this chop, which means we need to see the Euro Swiss get above parity 1.00. We get above parity, there should be room to run a 1.05. That's going to be a big target for me this year. Hopefully this freaking hits. Quarter one would be great. I would love to get out of this trade at 103.50 to 10500 by end of March. If I can, big profits. Anything else? Euro pound, no. Euro yen, no. Euro New Zealand, we took sell trades on that one. That worked out great. We sold that from 171 all the way down to 165. No trade on it right now. Euro dollar coming back up here to 107. Like I said, 108.50 to 109 could still be hit. But I didn't want to be sitting here stuck in positions that are like, I've got positions here that are still long on the euro dollar that are not profitable. But I leveled in enough that it allowed me to take some profit overall. So I'm net positive. I took it today. Now, like I said, I could see this going a little bit higher around this 109 to 110 level, and I see this dropping right back down. Okay, we have a monthly, weekly pivot cluster right there. We have some pockets in the near term as well. And I could see this area being tested around 102. We also have this big popular 1.00. Once we broke below 105 and went and we flushed through parity at 96, parity could certainly be hit again at 1.00. So if we get to 110 and we flush back down to parity at 1.00, who wouldn't want to be a part of that trade? If we have 1,000 pips of opportunity lined up, I'd take it. But I want to see confirmation. So let this pop up here. Look for some bearishness. And then we try to stab a high a little bit, look for a pattern, and then we can trade it back down. But I think there's a euro dollar trade to the downside that's coming sooner than later. If we hit 109 to 110, I'm very interested in shorting that euro dollar. Pound crosses, I'm going to stay out of pound pairs right now. Pound Aussie might just be range bound. This could be a good range trade. We sold it at the highs. We took some profit near the lows. That was a great trade there. Pound Aussie off the lows, we might have it pop right back up. So possibly this 76 to 7,500 support, range trade it back up to 1.8. We can look at that this week in Flex. Pound CAD, we shorted pound CAD and did a pretty good job. We didn't short this thing until like 66, 67. We took it all the way back down to 63. So pretty good trade right there. It could settle back into 1.60, but I wouldn't force that trade. That was enough. We had very little risk on that trade because we timed it really well. Pound Swiss, I'm still long on Pound Swiss. This one's a bit of a waiting game. Maybe some range trading in here as well. Range lows, range highs. So if it comes back up towards 1.16 or so, we need to break above this 200 EMA. If we do that, I think there's room to break out towards 120. So Euro Swiss, Pound Swiss could be some interesting breakouts this year. I'll be watching those pretty closely. Pound Yen, I'm staying out of, just short-term trading. Pound New Zealand, nothing. Pound Dollar. Pound Dollar might come back up here to retest. It may come back and retest this 124 handle, but if we hit 124, 125, I'm pretty interested in fading that back down. We've had a flash crash recovery on the pound dollar, coming back into this pretty massive supply zone. And from there, between 125, 126, or even equal highs at 124, I'm pretty interested in shorting that pound dollar, looking for some dollar strength. Okay. Yeah, we'll get that. I mean, yeah, that's fine. I'll say it. If everyone is, look, if we got a decent crowd watching, do me a favor, hit that thumbs up button for me really quickly. Take 1 second, click the thumbs up button. Let's get that, the number of viewers to the number of thumbs up. Let's get that pretty equal. Por favor, please and thank you. Okay, good on the pound. New Zealand CAD, anything here? Took some profit on a sell trade. We shorted at 87, 87.50. Took it all the way back down towards 85 or lower. Nice little short-term trade. New Zealand Swiss, I'm still long. New Zealand Swiss, I'm looking for maybe this high, low, lower, high, lower, low. Settle back in area 1, area 2, and then trade it back to the early pivot. Okay, I mean, this might be really simple. I mean, technically on the daily and weekly charts, if we're still below the 200 EMA, this still screams sell zone. So if we get positioned low enough, then sure, we can snap back to that 200 EMA. We can snap back to that pivot. And again, range trade, right? If this is a high, this is a low. If you want to short it, there's an opportunity there for some type of bear flag. That's fine. But for me, I like this positive rollover game for 2023. If the market's going to offer me positive rollover to hold positions, my goal is to buy this thing low enough where I can get paid to hold it and have this technically do what I need it to do, which is go up. Right? So that'd be plus on the positive carry, plus on the pips. That's a multiplier for more profit. So that's a game I'm going to play in 2023. Okay, thanks, Brad. Appreciate that. Thanks, everybody. New Zealand yen, another range trade. Right? We come back up to these highs, sell it, come back down to these lows, buy it. Pretty simple. Stop loss tight, stop loss tight. Look for confirmation to sell, confirmation to buy. Range trade in New Zealand yen. New Zealand dollar. If we can, I'm going to set a chart alarm here at the high at 65, 64.95. There, let me check into my overall position on New Zealand dollar. So New Zealand dollar could benefit from a bit of a commodity boom. I've got a break even around 65. So I might hang on to this one a little bit. My position size is pretty small. Yeah, it's pretty small. Otis, I don't know what that is. Oh, that's a covered call. Let's see. Yeah, so I'm going to hang on to New Zealand dollar for a little bit longer. Chart alarms are set. This one's at 65. Pocket up here on the FOMC breakout are on 67. So I'll just keep an eye on this one. This could be a retest of the highs. This might stretch a little bit higher towards this higher resistance zone and then look for some profit taking between 66, 67. Again, looking for some dollar strength, but hopefully not until higher highs. And if we have a commodity boom for right now, at least in the short term, materials up, commodities up, demand up, China reopening, this could benefit the Kiwi and the Aussie both against the dollar. Okay, dollar CAD 33.93. I honestly can't even remember how many trades we had on the dollar CAD last year. It wasn't very many. Truth of the matter is we bought the dollar CAD somewhere in here. I stayed out of it. We shorted it up here, and that's kind of it. DXY is crossing lows right now. That's fine. Euro dollar. Yep. So we're at some 107.36. That's fine. Okay. So dollar CAD. I still like the short around 146. Way the heck up here. If we have high, low, lower, high, lower, low, again, pretty well supported dollar CAD. So here's what I'm saying. If it comes back to 1.30, 1.30, that looks like a pretty solid support level on the dollar CAD. I would look to buy dollar CAD at 130. So am I shorting it right now at 134? No, I'm just going to wait. This thing's been a pain in the butt. But if we come to 130, I think that's a technical level to buy it. Tight stop loss, and we can range trade it back up towards 140. If it stays in this channel, we can still trade it this way. And it wouldn't surprise me, in all honesty, with this high from 146 all the way down to 120, and this just spends all this time consolidating but channeling, you just got to trade the structure. And if it's not in a good spot, if it's not at a spot that I want to buy it, or it's not in a spot that I want to sell it, then I'm not trading it. So the dollar CAD certainly has to come to me versus just placing trades. Dollar Swiss, 91.84. Just going to stay patient on dollar Swiss. I like the positive rollover factor. I know we have a yearly pivot sitting at 9,500. We have some previous lows back around 9,000. So 91 to 9,000, pretty interested in, scooping up some positions lower and then taking a chance back up to this dollar recovery, yearly pivot. Big fat pocket zone right back here between 96 and 98. So I'm going to turn this one into a pretty decent position, build small, get some confirmation, add to it, build bigger. And yeah, that's it. Pivot, monthly pivot, pocket, But obviously, confirmation is going to need to happen, right? We don't have it. So even if we adjust this trend line here, maybe it's a falling wedge, maybe it's not, maybe it's just falling harder. But could this be a, V bottom recovery? Could it be a cup and handle recovery? Sure. So I like the positive rollover though. So I'll try to take it. Dollar yen, stay out of this one, or trade it short term. This was quite the saga from 2022. Got my butt kicked here, lost, got my money back, and then some. So ended up making profit on the dollar yen, but it was a beast of a trade, and I would not ask any trader to go through that. It was, I did it in the trading room. It was not fun. I had traders that were, feeling the pain with me, but we ended up making it an okay position. So once we had the confirmation to trade it, we were pretty aggressive on the way back down, and it paid out nicely. But it did take a while. Okay, I did put a position in on the dollar Sing. Small position on this drop in the dollar Sing. This is the Singapore dollar. I was looking at this one on the weekly time frame. So I have some small positions built. We've essentially just dropped straight down from this high around September. And all I'm looking for in the dollar Sing is some pretty solid support around 1.30. So if we drop to 1.30, I'm looking for a bounce back up, even if it's halfway, right? Halfway puts us around 138. All the way back here puts us around 145. So let's just say 145 to 130. What's the halfway point? 37.50. So if I buy it low enough and it goes back to the midpoint, that's a good opportunity to be long, have some positive rollover, play some really strong weekly support levels, and I'm going to stay long dollar Sing. Okay, so that was kind of a newbie that I got filled on over the holidays, and I'm going to still keep kind of dollar cost averaging into that one over a couple of levels. Let me check my first position here. So my first position was filled at 3,300. My next position's pending at 3,150, and then my other position number 3 is at 3,000. So 3,300, 3,150, 3,000. Those are dollar Sing positions to level in. Big pockets, big demand zones, big supply zones, weekly time frame, all that good stuff. So that's what I'll trade. Okay, guess what? Long session today, but 2023 outlook. Big picture, right? Got some big picture on currencies. Expect some ranges. If you can, get the heck out of those JPY crosses. Protect your profits if you're short the dollar. We're going to watch the dollar closely. The Fed's going to be raising rates the first couple months this year, February 1st, and into that March rate decision on March 22nd. We're going to, of course, see what the market does as far as the SPX. I still think that it is a bull trap scenario. If it comes back up to 4,000, we're trading at 39.25 right now. In fact, today in Equities on Demand, I know we have a 400 by 405 SPY bear call spread. I think we just look to close that out and take some profit if we can, just to protect, because I think our expiration is next Friday. If that thing gets above $400, then we're going to lose on that trade. So SPY is trading at 391. So it still needs to go up another $9 by next Friday, not this Friday. But again, starting out this week, if there's some premium in that for us to protect, we collected 310 on the bear call spread. If we can protect, $1 of it, $2 of it, then I say it's worth protecting. So we'll talk about that in about 2 minutes. So that's it. I'm going to wrap it up here. There's a long session, but a nice 2023 outlook. I'd appreciate if you click the thumbs up button, support this. If you're watching the video, make sure you tune into the Pulver Report. We're live back in sessions Mondays and Fridays, youtube.com/Chris Pulver. Also, make sure you follow me out there on Twitter at Real Chris Pulver. I'll be tweeting more. Just needed a couple weeks off. Glad I got them. So back at it. Okay. All right, buddy. See you this week in the trading rooms, and nice to be back. Let's have a great 2023. See you. Bye.